Right now, Lucid Group is trading at $11.68, up by nearly 5% on the day. That move of 55 cents might seem small to the average trader glancing at their screen, but in the volatile world of electric vehicle manufacturing, it represents a significant pulse in a stock that has been fighting to find its floor. While many retail investors on the Robinhood app are fixated on the daily swings of Nvidia stock or looking for the next breakout in Apple stock, the price action we are seeing in Lucid Group suggests a deeper tug-of-war between institutional long-termers and short-term speculators. The immediate reality that most people are missing is the specific timing of this bounce. Just days ago, the stock hit a fresh 52-week low, dipping toward the $11 mark. Seeing a 5% recovery today isn't just a random fluctuation. It is the market reacting to a very specific set of expectations meeting a harsh operational reality. The curiosity loop here centers on the Lucid Gravity SUV. While the general market narrative has been one of EV winter and slowing demand, Lucid is currently in the middle of a high-stakes production ramp that will essentially decide the company's fate over the next 18 months. If you are using Fidelity mobile app or checking your Schwab Intelligent Portfolios today, you might see this green candle and think the worst is over, but the truth is more complex. The expectation was that Lucid would be delivering 20,000 vehicles by now. The reality is they've had to trim that guidance down to 18,000, and they are currently sprinting to hit that lower bar by the end of December. Investors often look at Tesla stock as the North Star for the industry, but Lucid's path is fundamentally different because of its backing. The common ground most investors share is the belief that Saudi Arabia's public investment fund will never let Lucid fail. It's a comfortable thought, especially when you see the recent expansion of their credit facility to $2 billion. However, the contrarian take you need to consider is that a lifeline is not the same as a growth catalyst. That $2 billion buys time, but it also highlights the staggering rate at which the company is burning through capital to keep the lights on in Casa Grande. When you're self-investing or looking for investment help on investing sites, it is easy to get caught up in the Saudi backstop narrative and forget that every dollar of debt or every new share issued is a weight on the eventual return for common shareholders. Looking at the daily swings, we are seeing a massive amount of volume coming from institutional players. Unlike the retail crowd on SoFi Invest who might be buying fractional shares, the big money is positioning itself for the Q4 delivery report. Institutional activity remains high at over 75% ownership, which tells us that the smart money isn't ready to walk away just yet. They are watching the manufacturing floor. In Arizona, Lucid has added a second shift and is reportedly producing 1,000 vehicles in certain high-output weeks. This is a massive leap from where they were a year ago. Yet the market is punishing them because the reality of a net loss of nearly $1 billion a quarter is hard to stomach, even with a tech stack that many engineers claim is years ahead of the competition. If you look at the sector momentum, it's clear that the broader EV space is hurting, but Lucid's recent alliance with Uber to provide vehicles for their robo-taxi fleet, powered by NVIDIA's technology, is the kind of development that shifts the conversation from car company to mobility platform. This is where the tension between expectation and reality gets interesting. The expectation is that Lucid is a luxury car maker for the elite. The reality is that their future survival might actually depend on becoming a hardware provider for autonomous networks. This shift is something you won't see reflected in a simple price quote on a Fidelity trading platform or Interactive Brokers trading terminal without digging into the partnership specifics. Comment below how many shares of Lucid Group you currently hold, or if you think the PIF will eventually take the company private to end the public market volatility. You understand why the stock is moving the way it is today, we have to look at what Lucid actually is. Founded by the former chief engineer of Tesla Model S, the company's business model is built on ultra-luxury efficiency. They aren't trying to build a car for everyone, at least not yet. Their flagship, the Lucid Air, remains the efficiency king, offering range that competitors like Porsche or Mercedes-Benz struggle to match. Their newer offering, the Lucid Gravity SUV, is meant to be the volume driver. But manufacturing a car is easy. Manufacturing a car at scale while losing money on each unit is the hardest thing in the world. Past performance shows a company that has consistently over-delivered on technology but under-delivered on production timelines. Last year's reports were riddled with supply chain headwinds, a term that has become a bit of a cliché in the industry. The shift into the future outlook for Lucid Group is where we see the most significant catalysts. The launch of Lucid Recharged, their new certified pre-owned program, is a strategic move to build a secondary market and support residual values, which is a major concern for luxury buyers. If you are online investing or using a Fidelity brokerage account, you should be watching the mid-size platform news very closely. This is the $50,000 vehicle aimed directly at the Tesla Model Y. This is the ultimate expectation versus reality test. The expectation is that Lucid is a luxury car maker for the elite. The reality is that their future survival might actually depend on becoming a hardware provider for autonomous networks. This shift is something you won't see reflected in a simple price quote on a Fidelity trading platform or Interactive Brokers trading terminal without digging into the partnership specifics. The risks are undeniable. Macroeconomic pressures, specifically high interest rates, and the end of certain federal tax credits have made luxury EVs a harder sell. We saw this reflected in the recent Morgan Stanley downgrade, where analysts slashed their price target to $10. They are looking at the EV winter and seeing a company that might not reach profitability until the end of the decade. This creates a ceiling on the stock price despite the current 5% rally. When you use an online investment tool or a SoFi trading platform, it is vital to separate the car from the stock. The car is an award-winning piece of engineering, voted 10 best by Car and Driver for 2026, but the stock is a high-risk venture capital play that happens to trade on the NASDAQ. For those looking at Fidelity ETFs or Fidelity mutual funds that hold Lucid, the diversification helps, but for the individual brokerage owner, the volatility is the point. You are betting on whether the technology advantage, the 900-volt architecture, the compact drive units, can be monetized through licensing or massive scale before the cash runs out. The reality of their current liquidity is $5.5 billion, which sounds like a lot until you realize they could burn half of that in just over a year of aggressive R&D and manufacturing expansion. As we wrap up this analysis, let's look at the central insights. The expectation was a slow, painful grind toward a potential bankruptcy or a forced buyout. The reality we are seeing today is a company that is stubbornly alive, technically superior, and backed by a sovereign wealth fund that seems committed to the long game. Today's price of $11.68 is a reflection of that resilience, but it doesn't mean the road ahead is smooth. The contrast between the critical acclaim of the Gravity SUV and the downward revisions in production targets creates a gap where only the most patient investors can survive. Whether you are using Interactive Brokers fee structures to trade the volatility or holding long-term in Fidelity IRAs, the mission for Lucid remains the same. Execution must finally catch up to the engineering. We've seen the expectations of a $20 price target crumble under the weight of reality, but if Lucid can deliver those 18,000 vehicles by year-end and show a clear path to the mid-size platform, the current underweight narrative might look very different a year from now. This is a stock defined by the tension between what is possible and what is profitable. Until those two things align, the swings we see today are just the beginning of a much longer story.